Hello, my name's Alan Foom, and I'm recording this video on the 21st of March, 2022. So things may have changed since if you're watching this a bit later. But today I'm going to talk about Russian oil exports, recent past and possible futures. So following Russia's invasion of Ukraine, there's a focus on Russian oil exports. Now, this is painful for me personally. As people of Russian origin, I have both Russian and Ukrainian ancestors. I have family, distant family in Ukraine, slightly, obviously less distant family in Russia. You know, my grandfather, who was a Russian-speaking Ukrainian, fled Ukraine in the 1930s during the hunger time to go to Russia, where he met and married my grandmother. Both families suffered as a result of Soviet communism and this horrible war, which I absolutely hate. I totally loathe. I just hope it ends, and I feel horrible about the suffering of the people involved. But we need to talk about oil and where it goes and where it's likely to go. So I'll talk a little bit about Russian oil, a little bit about where the Russians export oil, and some things that have happened. Boycott of Russian oil by some Western companies, but increasing sales to the East, China and India. So where do Russian exports go? These are two charts. So this is crude exports. So you can see a third of it goes to China, and roughly 55% of Russian crude goes to the Western countries. Quite a lot goes to the Netherlands, but that's shipped via Rotterdam to third parties, so that's more of a transshipment thing. Quite a lot to Germany, quite a bit to Korea, Belarus, and some other countries. And if you're looking at refined products, so this is diesel, gasoline, kerosene, etc., which is refined in Russia and then exported as product, about 70% of it goes to Europe. United States is also a significant importer of Russian products, mainly diesel. The United States has had a diesel shortage, and they're making it up with Russia, with Russian crude. Now, there's a feeling that Russia is like a gas station masquerading as a country. That's not really true. This slide I did in one of my previous talks about Russian gas. So some figures from 2011, admittedly 10 years ago, but the Russian oil sector is 17 and a bit percent of GDP. Okay, significant, but not ultra dominating. But Russian oil dominates in exports, a bit less now, and also in budget revenue for the government. Hence, Russian personal taxation is relatively low. But Russia is a full service economy. Most of the manufacturers actually stay in the home market. We're talking specialization, things that people are particularly good at, and also a big agricultural country, and has a general full service sector. Russia's quite autarkic, i.e. they're independent and perhaps less connected than other countries in the world economy. Now, you can argue whether that's a good thing or a bad thing is another question. Also, resource rents are not the be-all and end-all of Russia's economy. So these are figures from the World Bank, Western authorities. So here's Russia. Just under 9.5% is resource rents from oil and gas. So red is oil, blue is gas, grey is coal. And that's a lot less than many other countries. So Saudi Arabia is 24%, Nigeria is 7%, they've got quite a big agricultural sector. Norway is 6%. The real people who have a lot of dependency are the Libyas, the Iraqs, Kuwait, Congo, Timor-Leste, small country in Southeast Asia, etc. And UK, US, Canada, significantly less, ditto Brazil. So oil and gas are not the be-all and end-all of Russian economy, but a vital and useful sector and a generator of cash. So here's Russia's oil balance. So this is looking at the BP Statistical Review from 2020. The pie chart is BP's view of exports. So that's Europe and that's China, plus others. So the orange is Russia's internal consumption. So you can see after the fall of communism, it fell, it's plateaued, then recovered slowly, and then kind of plateaued again. And Russia's oil production, again, fell after the collapse of communism, bottomed out in the mid-1990s, recovered by the early 2000s, slow growth since then, and then a bang fall due to COVID and responses from COVID and shut-ins to do with OPEC+. Now that will recover as oil demand worldwide recovers. So where and how do the Russians export their oil? So this is a map of Russia, and you can see the red stars and this symbol here are the different tanker export terminals. So Primorsk and Ust-Luga near St. Petersburg, Murmansk in the Arctic, Varanday in the Arctic Sea and Pechora, Novorossiysk in the Black Sea, Nahodka in the Far East, Sokol, Sakhalin, near Sakhalin, also in the Far East. And these are the main tanker terminals that export. You've also got two pipeline systems, one going west and one going east. The pipeline system to Europe, called Druzhba, which was created in Soviet times, exports about 1.4 million barrels of oil per day from the Volga Urals, which is located about here, which is the heart of the Russian oil industry, also linked up to West Siberia, biggest heart of the Russian oil industry. And that goes to Italy, Austria, Czech Republic, Germany, Poland, and the Baltic states. That's a direct pipeline export. The ESPO, East Siberia Pacific Ocean, kind of does what it says on the tin. So that comes out of East Siberia, goes into China and to the Pacific Ocean, where it feeds the Chinese market. And there's plans to expand it. A little bit about oil blends. So this is a chart based on from S&P Platts, which looks at the different types of oil blend around the world. Now, I have a video on different types of market crudes and benchmark blends, which I'll link to at the end of this program. And what you got here is the y-axis is API gravity, or the weight of the oil, specific gravity of the oil, and the x-axis is sulfur percentage, the size of the bubbles or the size of the particular streams. You can see Urals blend in here, medium sour crude, mainly used for diesel and distillate, plus various others, and then some light sweet crudes, ESPO and Siberian light, that come from here, which are quite close to the Brent blend, which is this circle here. And this is CPC, which is exports of Kazakhstan, very light sweet crude, comes through Novorossiysk in the Black Sea. Now, since the invasion, Russian oil has been trading at a discount. And these are two charts. So this is a chart from Neste via Thomson Reuters. So previously, Urals was trading at about $2-3 a barrel discount to Brent. And then after the invasion, it's gone down to about 20 to 25. Yeah, that looks pretty significant. And this is due to effectively boycotts by some Western oil companies. Challenges in getting shipping, so challenges in getting tankers, challenges in getting tanker insurance, letters of credit, etc. from Western banks. And also some direct import bans from USA, Canada, and UK, though I think you can import stuff indirectly, and there have been some waivers, so that's not quite as watertight as some of the politicians say. And here is a chart showing the WTI, which is the West Texas Intermediate, the US blend, and Brent, which is the UK blend, the main international blend. So you can see it's gone up to 100 plus. And you can see Urals here, the two kind of linked here and then widened side. So on average, you have a discount of about 20 to 25, and that seems to now be baked in. Having said that, the Russian fiscal budget is about $40 a barrel. So you can see they're still making a profit. And Russian oil companies, 80-90% of the costs are in rubles. The rubles has fallen, although it's now plateaued and steadied down. They're still making tons of money. This is a little bit about Russian oil exports to Europe. Again, so this is data from Eurostat. You've got the blue are crudes, and then these are product exports, and these are how dependent different countries are. So you can see Eastern European countries, because of Soviet links, are more dependent on Russian oil and petroleum products than the Western European countries. But even then, even Germany's 29%, Belgium and Netherlands in the 20s, Greece is in the 30s. It's a significant import factor into Europe. And if you're looking at oil import shares by country, so this is looking at Europe plus, and then looking at China. So in Europe, imports 39% of the oil comes from Russia. So that's Europe plus, so that's everything basically west of Russia. Then they import quite a bit from the USA, light sweet crude from the USA, which is blended down, and then some stuff from the Middle East, etc. If you're looking at China, which now imports more oil than Europe, okay, Russia's their second biggest supplier after Saudi Arabia. And then they import quite a lot from West Africa, other Middle Eastern countries, etc. So these are the two main oil and gas exporters. If you're looking at slightly the broader picture, so you slightly zoom out, you're looking now at exports. So this is Russia's share, which is about 12%, and it's been like that pretty much all the time. And this is the Middle Eastern green, and then other countries in Canada in the purple, and then Mexico in the blue. Again, growth in oil exports because basically growth in demand, countries that have relatively low domestic oil supply. And there's a little interesting graph that was posted on my social media, which is for demand growth in March. So this is looking at the near future for this coming year from two sources. That's the IEA, the International Energy Agency, and that's OPEC. So this is March. So this is after the invasion. These people, this don't know what they're going on. So IEA forecasts a growth of 2 million barrels of oil per day, whereas OPEC forecasts 4. Now, you could sort of say this is Mandy Rice Davis supplies for OPEC because they're exporters, but still significant growth. So you've got a challenge to try to meet that with declining oil production in some countries, relatively low growth in others. Freezing Russia out might be a bit of a challenge. And when you look at other energy, it's also there. Russia's not just oil and gas, also coal. So this is Russia's share in terms of importing thermal coal to Europe. Now, European coal demand has shrunk, but Russia's share of that has gone up. And these are the prices of coal, and you can see these have skyrocketed as well. And if you look at other commodities, again, Russia's not just oil, gas, and coal. It's also platinum, palladium, fertilizer, wheat, grains, and nickel, as well as various others. And this is a thing I'm really scared about. So this is dependence on wheat from Russia and Ukraine. Various African countries, also Middle East. This could potentially be a very serious problem, very serious humanitarian problem. Quite how we solve it, I don't know. So where next? Yeah, well, crystal balls are challenging. Now, this is something that was posted by this fellow, Li Jianjiao, who is a Chinese government official, talking about the international community you always hear about. Okay, it's a bit of trolling by the Chinese, but we need to know where they're coming from and what they're doing. So Western countries, while they account for 55% of Russian oil and they've decided to eliminate this, they've stated that, it's going to be very challenging. Urals is a key medium weight crude for diesel and oil market, and the oil market has been up due to post-Gulf recovery. There's little available capacity in other countries to increase production, particularly to increase production fast. And the West has been begging Iran, Venezuela, Saudi Arabia, UAE to exist production, and not much of that has been happening. I mean, US has had problems with Iran and Venezuela, and well, they've been basically told them Iran and Venezuela basically told them, this is our price. Oops. And Boris has been off to Saudi Arabia and the UAE, and they at least politely listened to him. They didn't bother talking to Joe Biden. So that's where that's coming from. Asia continues to buy Russian crude and may well increase purchases. There's also a new currency dimension. There's some cargoes that have recently been sold where the Indians have been paying rupees, so bypassing the dollar. And the Saudis have also decided to sell some oil to the Chinese to be paid for in yuan, and building refineries and investing in Chinese refineries. So is this the end of the petrodollar game? Is petrodollar an end game? Now, that's particularly very serious economic implications, which other people can talk about more than me. And there's also worries, inflation, recession, demand destruction. Okay, we have growth forecasts, but are they really going to come true? So Chinese say, may you be cursed in interesting times. Unfortunately, we are in interesting times, and you just hope and pray that times become boring again. Thank you very much. Please like, subscribe, and I'll see you on the next one.